What is up, you guys? Pete DiCarlo here, and today we're finally doing the deep dive on Wish. I spent about 10 hours breaking down this company, looking at the financials, understanding what makes this company grow, and today we're going to do a deep dive on it. So if you guys have any companies you want me to do a deep inside fundamental look on, please comment that down below. This way I can curate the content on this channel based around what you guys want to see. And Wish was the biggest one that I had people asking me about. And there's three reasons why it is piquing the interest of the public right now. Number one is it has massive short interest. So at this point, it's about 20 million shares that are shorted, which means that with everything going on with AMC, GameStop, and Wall Street Bets, we could see this get a massive short squeeze within the next couple of weeks and months. And so a lot of people want to get in on the next GameStop, the next AMC. And you guys know for me, I don't ever try to get into the next anything. I want to, get into what is going to be a disruptor or, an emerging new trend. So that's one reason. The second is it's down massive since IPO. The stock is down nearly 50% since it went public. If I go ahead and put my my charts up right here, you can see the stock IPO'd right around $20, and now we are trading at $10. So that also seems that there could be some good value there. And the third thing for me personally, which I don't think a lot of people are thinking about, is the IPO lockup period is over. So for those of you who do not know what that is, when a company goes public, the original shareholders cannot sell any of their shares until 6 months after the stock went public. So this way, you don't have somebody who invested in this company, 5, 6, 7 years ago before it went public, dumping all their shares at the open so that they can get liquid. So let's take a look at the business model. We're going to go over some of the financials, and then we're going to go over if I think this is a good long-term investment. So the mission statement. Now, also, we're looking right now at the investor relations page. For anybody who wants to do some deep diving into any companies that you want to know about, every company has to release a 10K, a 10Q, and their investor relations page. So I recommend that you learn how to go through these documents and the investor relations page because they're very important. The investor relations page is, just kind of like a PowerPoint, but the 10K and 10Q are a little harder to read. I can definitely make videos teaching you how to do that. So let's take a look at the business model, how they make money, and how they'll scale. So first thing is their mission statement. So the mission statement is to bring affordable and entertaining mobile shopping experience to billions of consumers around the world. Now, the initial competitors that I think of is like Alibaba, AliExpress, Amazon a bit, Walmart online, but essentially Wish really is just like a dollar store on the internet. There is a bad stigma around Wish. You probably see all these like Wish version memes, so like a Wish version of this or that, and so automatically it has a kind of bad taste in my mouth. I've never been on Wish up until today. I've never looked at anything on Wish up until today, but it kind of met my expectations. Now, they're real. Let's take a look at their snapshot first. So before we get into any of the financials. So right now they've done $2.5 billion in 2020, which is a 34% year over year growth. They have 107 million users. Now, that is their monthly active users. Monthly active users is important. That is up 20% year over year. But what I care more about is what is their average user revenue. So what is the average user spending per month? Now, they have 550,000 partner merchants. When I talk about merchants in this, context throughout the rest of this video, a merchant is just a seller. So a merchant is a store that signs up on, Wish and sells things. Kind of like how, a merchant would be on Shopify, where you sign up, you make a Shopify shop, and then you sell things there. They're across 100 companies, and then they have Wish local partners. So I'm not going to talk too much about the local partner program because it's really not that important as of right now, but essentially they try to put like local brick and mortar businesses on the Wish website and push them. So that's something that's not really important as of right now. But let's take a look at the company a little bit deeper. So they believe, and this is where I don't agree with this at all, but they say that people making under $75,000 a year household have been left behind when it comes to online shopping and value of shopping. That is not true in my opinion, right? If you look at Amazon, there are a lot of cheap things on Amazon, especially if you get like the Amazon Basics brand or like the Walmart Basics type of brand, or even like Target has like a lot of their Basics brand. I think like Threshold is one of theirs. They're a little bit pricier, but overall, I don't really agree with that because you can buy cheap, decently quality products online that you don't need to go to Wish. I mean, you can buy it at Express, which is like really the most direct competitor. We're going to talk about that later on, but I don't agree with that. Now, if you look at Europe and the United States, which makes up for a majority of it, like Europe alone is like 70, I think 68% of all of their revenue comes from Europe, like 30 something percent comes from the US, and then like 10% comes from the rest of the world. But I don't really agree with that because, like I said, there are a lot of reasonable online e-commerce shops that sell decent quality products for cheap. So I don't agree with that. Now, like we did say originally, globally, most of their income comes from the United States and Europe, but the rest of the world, they could have something because the rest of the world, they might not be able to afford things on Amazon. They might not be able to afford things in these poorer countries, unfortunately, for things on Amazon.com or Walmart. But that's for a later discussion. So overall, I don't agree with that statement right off the bat. Now, 72% of the income across, and this is very important because there are three major levels to this business. The major level is the marketplace, which is what you guys have probably seen, then the product boost, which we'll talk about later, and the logistics. So 72% of all of their revenue comes from their merchants or their marketplace. So just like Amazon, you can go on, you can create an account as a merchant on Wish, and I can sell whatever I want. Let's say I sell, really good example because it's a cheap product is iPhone cases. So I have a shop where I sell iPhone cases and I call it Pete DiCarlo cases. 72% of all the revenue for the company comes from merchants selling on their shop. And obviously they take a commission. So for every item that is sold on the shop, they take a commission. And that is basically what most of their business model is. Now, they also have a second model called Product Boost. The best way I can explain Product Boost is it is essentially Facebook ads, but for Wish. You know how when you go onto Amazon, you can, you'll see sponsored next to some of the listings. Well, people pay Amazon, or if you go to Facebook Marketplace, they pay Facebook so that Facebook puts their, listed items first. So that makes up for about another 15 to 20% of their revenue comes from Product Boost. Now, there is a potential for that to become more, but one of the bad things that I've noticed going through the financials is that there is a decline in the amount of revenue that they have of Product Boost over the past year. So when your merchants do not want to invest their money into you pumping it across their platform, that tends to not be a good sign. And the third thing is the logistics section, which this is only 3 years old. This is like less than 10% of the income, but this could be a big income producing, driver for the company later on. So this is essentially them shipping the product for you and you prepay on every single product. So for those of you who have never used AliExpress or Alibaba, more specifically AliExpress, you can buy stuff for cheap. I mean, very cheap. You could buy a plastic phone case for like 10 cents instead of going to Target and spending $10. Now, of course, the product is going to be crappier, but the main reason that I don't use AliExpress and the main reason I don't use Wish is the fact that it can take 3 to 4 weeks just to get a product to you because it's coming from China and is not cheap to ship things from China. So I used to run a company. It was ridiculous, but it's called Flex Anime, and we used to sell like anime, different anime products such as like little figurines, phone cases, t-shirts, workout equipment, all based around anime. And what I would do is I would drop ship it. So I became a merchant for Amazon. I became a merchant for Shopify. I became a merchant for all these different places. And what I would do is I would sell these products. Maybe it took $1 to make and $1 to ship, and I would sell it for $5. And I would keep the difference after paying service fees and all of that. None of my, customers were happy, unfortunately, because if you order it, it's going to take 3 to 4 weeks. You could pay more to get it shipped within a couple of days, but it's very expensive. And so what Wish is trying to do with their logistics program is each company or each merchant pays to, have this product shipped through Wish. It'll be a lot faster, a lot safer, but you do have to pay more money. And depending upon how they scale that, that could be huge for the company. Now, one thing that you have to notice is that as this business grows, they offer more and more to their merchants to make them more and more successful. So the more successful the merchants are, the more successful Wish is. So Wish, you can see it right here. They're a two-sided network connecting merchants with a massive audience of consumers, and they show you this little flywheel. The flywheel is like a core staple to most businesses. If you actually look, I dropped those books. In the book, Good to Great by Jim Collins, one of the biggest things he talks about is flywheels. And essentially, a flywheel in business is what you would think of like pushing a gigantic snowball up a mountain. It's very hard at first, but as the business model moves and moves and moves, it just grows exponentially. So essentially what they're saying here is that, you know, they optimize their logistics, which means their users and merchants get better support. They get better user acquisition. The lifetime of value gets higher and higher. They get better pricing. The user gets a better personalization program. The merchant gets better insights, which therefore produces better products, which means they get to boost their products, and it just goes in this massive cycle. That is how most businesses work. So I just feel like it was important for me to explain that to you. So the good thing about the business model for Wish is just like Shopify. The better that their merchants do, the more money Wish is going to end up making. Now, like I spoke about, and one of the biggest problems to this is how terrible the shipping is from something like Wish or something like AliExpress. And this is why Amazon has grown so well over a decade, because I can hop on my phone, I can order something, and it can get here within a day, right? Be honest to yourself. What would you rather do? Would you rather spend $5 on this iPhone case, but I can get it here tomorrow by 2 in the afternoon? Or would you rather spend 50 cents and it's going to take you maybe 30 to 60 days? For me, I would rather spend more money because I have a phone without a case on it, and I don't want to break my phone waiting 2 months for this stupid case to come to me. Now, of course, not all shops work that way, but that is one of the biggest issues I see with this, is the fact that it does take forever for these things to get here. Now, let's look at some of the other downsides for the company. Let's look at merchants. So we know that this company really lives off of its merchants, because if there are no merchants, guess what? There is no business. It's just a website. Now, looking at their merchants, like I said before, I used to drop ship. We used a factory, and we didn't just sell on one program. So I would reach out to a factory over in China, and I'd say, okay, I'm looking for XYZ product. How much are you going to produce it for? That company is not working just for me. That factory is selling to thousands and thousands of other people. I am just kind of like the representative of my area and my company. For me, I was not just selling on Wish. I was selling on, Wish wasn't around at the time, but I would have been selling on Wish. I would have been selling on Amazon. I would have been selling on Shopify. I would have been selling on my own website. Would have been selling on Etsy. Probably also would have been selling on like Walmart. Because Walmart online, it doesn't have to be Walmart products. You can put any product up. The issue is, you look at like the declining on revenue from their Boost program. In 2020, that is where the most amount should have been going, because you need to hit it hard. Everyone's online. To me, that shows that these people who are selling on Wish do not believe in it nearly as much as they believe in everything else. If you had like $100,000 advertising budget for the year 2020, what would you spend your most time on, right? Wish, Amazon, Facebook, whatever it is you're selling on. A lot of people didn't spend money on Wish, which worries me, because if your merchants are not spending a ton of money boosting their products on Wish, that could not be a good sign. The second thing is the decline in monthly active users dropped 7% and active buyers dropped 3% year over year. So that's not good, right? The fact that their their monthly active users is declining is not a good sign. Also, the fact that the buyers have dropped 3% is also pretty bad too, because for me, like, let's be honest, I really think to myself, like, what the hell? Like, how many people buy on Wish, get a crappy product, and then continue to buy, right? I know very little people who go to the dollar store, even when I was poor as hell, guys. Like, I'm talking about, like, I had no money. I didn't know what I was going to eat. I was living off welfare. Like, I still didn't buy everything from the dollar store. And it's like, for me, it's like, you look at a company like Amazon, where I can get a little bit better of a product, I can get it here very fast. Why would I not do that, even if I don't have a ton of money to my name? So for me, I don't know about the sustainability of people actively buying subpar stuff off of Wish and waiting forever for it to get there. Now, the other thing too is like there's just a poor name about it, right? And there's bad memes, and I know it's like a joke, but it's really not, because Wish is known as like crappy products from China that people don't want. And I'm not saying I'm not saying it's like a terrible thing. I don't personally feel that way. I've worked with a lot of those factories in China before. A lot of the stuff is decent quality, but it has a bad reputation. And so I don't know how long Wish is really going to be around. And a lot of people say, well, isn't it just Amazon? That's the biggest thing I've been hearing from a lot of people, is like, isn't it just like Amazon? It's not. It's not like Amazon, because Amazon is the way it is, and it became so successful because of its logistics. Wish could be there, but it's gonna take some time. It's gonna take a lot of money, and it's gonna take some time. There is huge upside to this company, but I think there's a very small chance that they get it done. Now, Wish has insane competition, like Baba, like Alibaba, like Amazon, and with their merchants not spending as much money in Boost, it really worries me. If this company can pivot and really focus on logistics, really push their logistics program, get these items to their, clients as fast as they possibly can without breaking the bank, which is very, very tough. Look at what Amazon had to go through. I mean, this thing has insane margins. That's one thing that I'll say. Is like Wish is any type of business like this, but more specifically Wish, their profit margins are like 50% because they spend so little money to run this company. It's not like they're holding on to inventory that's going to go bad. It's like the margins are insane. So if they could grow at like 27%, 30% year over year for the next 10, 20 years with a 50% margin, that's insane. For me, I would contemplate buying this at about $5. But anything higher than that, it's a huge, huge risk. And I'm not saying that you can't make a ton of money off this and this can't be like a huge investment, but you need to just look at it for what it is, understand how risky it is, and invest accordingly. Guys, thank you for all the support. Go and check out my private academy. Get 100% off for your first month, 100% free. Get access to all my trades live as soon as you take it. Live stream me and my team every morning for the first hour of market open. Get access to our 60-hour course library and our Discord. Follow me on Twitter. Post a lot of my trades there and anything I deem to be important for you guys. And it's the easiest way of staying in contact with me. And most of all, let me know what you think. What do you agree with? What do you not agree with? I'd love to hear from you guys. Hit the like button, subscribe, and I'll see you next time.